you suck at management accounting, or you failed it a couple of times and are scared to fail it again, or you've heard from other students that Mac really is a monster and you should be afraid. Well, stick around so that I can show you how your approach can help you pass Mac the first time. Hi, I'm Francois from Tebaldi and I'm the Management Accounting Lecturer. In this video, I want to chat about how to approach management accounting so that it's less scary, makes more sense, and you can be more efficient as you work through the topics. Now, often students struggle with Mac because there's no clear rules. It's not like financial accounting where you have the IFRS standards, or auditing where you have the ISAs, or tax where you have the Tax Act, where there's specific rules and specific structures to questions. Management accounting is more unstructured and you really have to understand the principles, and every time they ask a question, they ask it slightly differently, and you need to really understand it in order to do well, or even sometimes just to pass. Now, the way I approach management accounting is to first understand what is the main aim of a management accountant or a financial manager. It's the same thing. So management accounting is usually broken down into costing or management accounting, and then financial management or finance. But it's the same thing, and often it's the same person doing both jobs. So we'll just talk about MAC or management accounting, and we're dealing with both those two. Now, the first thing to understand is that the main aim of the company is to obviously be profitable. You need to make a profit. There's no use in running a company that continuously make a loss or aim to make a loss. So you want to be profitable. But even more than that, you want to increase the value of the company to the shareholders. Remember, they invested money in this company and they want their money to grow in value. So the job of the management accountant or the financial manager is to grow the value of the company. Now, if we look in two places, the financial statements, we've got the statement of profit or loss and other comprehensive income, the income statement, and we've got the statement of financial position, the balance sheet. So if you look at those two, you can almost, how our picture is costing is concerned with the statement of profit or loss and other comprehensive income. We want to make a profit. So costing, if you think about it, look at this statement from Pick n Pay. We've got our profit statement here. There's our net profit. It increased from the previous year. We start with revenue, so sales, and then we have costs. So all of it is basically costs. So costing deals with making a profit on the statement of profit or loss. So that's the job of the management accountants, to make sure that we make a profit. So we need to consider what is the selling price, how much it costs to make the products, how much inventory we should keep, should we drop certain products, should we launch a certain product, and at what price should we do it. We can compare variances, budget, etc. So that all relates to the statement of profit or loss and to make a profit. So it's important to understand that is the aim of what we're doing. Whenever you pick up a topic in management accounting or costing, somehow it deals with making more profit. Then if we look on the finance side, the financial management side, now this is usually the job of the financial manager. Like I said, it could be the same person. And here we have our assets, equity, and liabilities. And here we want to make sure that whatever we do must increase the value of the company to the shareholders. So whenever we buy assets, we invest in assets. So we're looking at non-current assets. We must only invest in assets that will increase the value of the company. When we look on the liability side and equity, are we going to issue shares to raise money? Are we going to borrow money to raise money for this company? So where do we get the money from? That is the finance decision. So equity or liabilities. And again, remember, we want to increase the value of the company. So we must borrow at as low a rate as possible. Or when we issue shares, we want to make sure the cost is low so that we can invest it to earn a higher return. That will increase the value. So on the asset side, what do we invest in? Are we going to buy this machine? Are we going to buy this other company? Are we going to expand into this country? So what do we do with the money? So where do we get it from? Equity and liabilities. What do we do with it? Assets. And from there, we will generate profits on the statement of profit or loss. And then we have our current assets and current liabilities, working capital management. So you can see all of it is integrated into how do we increase this value of this company. So there's a lot of terms, there's a lot of stuff that I mentioned here, which is the topics that you will cover in management accounting, but we'll come back to the main aim of this company is to earn a profit on the statement of profit or loss and to increase the value on the statement of financial position. And it's the job of the management accountant to do that. Okay, so now, how do we approach management accounting? Every single topic you go through, you need to understand the what and the why of that topic. So what does this topic do? And why is it important for this company in order to increase the value? So for instance, weighted average cost of capital. If you've done that, you'll know what it is. The what is, what does it cost us to get finance for this company? So you were looking at the statement of financial position, the equity and liability side. How much does it cost us to get funds to fund this company? What is the rate? So that's the weighted average cost of capital. So what? We need to understand the what. Then why do we need that? Well, we need to know what that rate is. So say it's 15%, because then we know we can only invest in assets that will earn an internal rate of return more than 15%. So that's the why. So what and the why. So for every single topic in costing and finance, you need to understand the what and the why, coming back to the main aim of the company. The next, another problem with management accounting is dealing with something like this. You get a case study that's pages and pages full. Now in second year, it's maybe not a big problem. In third year, it becomes bigger and bigger. And then CTA, suddenly you have 5 or 6 pages in an exam. How do you read through this exam and still make sense of all of this? And how do you find the information? So a little trick that I use, and you have to do this whenever you study for management accounting, even if it's the new topic that you're studying the theory on, or whether you practice a question or do an assignment. What I do is this. I imagine that I was appointed as the financial director of this company. So in this case, it's Botsumi Limited or Motsumi Limited, whatever the name of the company is. There we go. I was appointed the financial director. They pay me 1.5 or 2 million rand as a salary. So it's a lot of money. I'm qualified as a chartered accountant, so they're going to pay me a lot of money to work here. I've got 3 months to prove myself, so I'm on probation, and this is the first meeting. So they give me this case and they say, listen up, this is the background of the company, this is the problems we face, this is the transactions we plan, this is our strategy. So that's the case study that they plant in front of you on your first meeting at the company as the new financial director. So you really have to listen up here. You have to read carefully. You have to listen to every single word and sentence they say in this case study. Otherwise, you're going to make a fool of yourself and you're going to answer the wrong questions. So you have to imagine that you are working at this company. This is real information. You have to engage with the information, actively read it, make notes as if you are being briefed on your job. And remember, your job is to make a profit and increase the value of this company. And at some point later on in the required, they're going to give you some problems that you have to solve. So they're going to ask you to calculate the weighted average cost of capital and then maybe discuss it. So you have to pay attention to the information in order to do that calculation. And if they say discuss or briefly discuss the risks for this new expansion project that they have, you have to think, well, I'm the financial director. I have to really give value. I have to answer the specific questions. So make sure that you understand exactly what they ask. Don't just read, scan through the information, scan the questions. Oh, this is ABC question, and go off with your answer. Really engage with the information and bring it back to what is the aim of the company and what is your job in this company. And that just makes Max so much easier to understand, and it actually make it more fun, because every single topic that you study will add to your tools that you can use as the financial director, financial manager, or management accountant in helping this company be profitable and increase the value. So don't be afraid of Mac, and if you want to find out more, please contact us. There's the email address in the description below. You can check out our website, and you can, if you have any questions, pop it in the comments and I'll go and answer your questions there. We'd love to hear from you. Have an awesome week.